The wait is over, the downtrend is invalidated, and October is finally back in session, at least for now. Hello and welcome back once again. It is a beautiful day to be in the crypto markets. Bitcoin and crypto as a whole has experienced some absolutely blinding bullish price action over the last couple of days, and it does look like there is at least a decent chance of this continuing for the foreseeable. Let's jump straight in and take a look at the last couple of hours of trading and see where we are likely to progress from here. Bitcoin currently just scraping at a price of $68,000, and it feels so good to be saying that again. Let's zoom out and take a look at our technicals. So, a couple of key levels that we've been discussing over the last few videos, and a couple of key levels that you no doubt will have been watching. The first one that we had to break was $64,500. Why? Because this invalidated the technical downtrend that we'd been in since the highs put in towards the end of September. That was absolutely smashed back on the 14th of October. Wasn't entirely clear if we were going to keep up that move. It was convincing the way that we broke through that level, but we did pull back a little bit. The next key level that we had to break to the upside was, of course, $66,700. Why? Because it would have validated a technical uptrend from the lows that we put in back on the 5th of August. So the low here from the 5th of August, then we put in a high, then we put in a higher low, then we put in a higher high, then we put in a higher low. Looked like it was going to come in on the 3rd of October, actually came in on the 11th of October. And just now, within the last 24 hours, we have put in a decisive break of that 66,500 level and confirmed an uptrend, technically speaking, at least from the 5th of August. Now, if I just zoom in here, we can see we had some pretty choppy price action around that $66,500 level. I'm specifically talking about this move here. You can see within just a few 15-minute candles, we put in a price move of around $3,000. At current prices, that is about 5%, right? We broke through that level to the upside, came up as high as $67,900, and then got smashed back down almost immediately down to $64,700. Now, we knew that this was a possibility, right? Let me just play a clip for you from yesterday's video so you can see what we were talking about then. You can also see in the derivatives market a lot of leverage, which is now very, very much stacked on the downside, that being leverage long positions that have jumped in the market on greed, trying to jump onto the trend with leverage, trading with money that they don't have. And of course, this does leave us open to liquidation risks to the downside, where those positions are forced to close. That's what a liquidation is. The position is forced to close, it is forced to sell. And that means that they are essentially dumping on the market. Now, where that gets dangerous is when one round of long liquidations leads to a sudden price drop, which leads to a second round of long liquidations, which leads to another rapid price drop, which leads to another round of liquidations, etc., etc. Now, I played that clip just to remind you that we can see this scenario happening ahead of time, because it's the same scenario that always happens, okay? The market gets euphoric because we're ripping up. People jump in on long leverage, trading with money that they don't have, and then they get liquidated. We can see that coming ahead of time just because it's happened so many times in the past, and other market participants, other big players can see it happening too. In the last 24 hours, around $120 million worth of long positions liquidated. It is far too easy when the market is this predictable for big market players to bully the market, manipulate prices to their own advantage, okay? All they have to do is put in a big sell order. The market absorbs that liquidity, it starts to sell off. And as soon as prices come down to a point where they start liquidating or stopping out long positions, leverage long positions in this case, that causes a sudden supply shock on the market, increased supply because those people are now forced to sell. Those participants are forced to sell because they're being stopped out, they're being liquidated. So there's increased supply on the market relative to demand. Prices move down a little bit further, and then we can get that cascade effect where the next round of leverage long positions are also suddenly forced to sell because they become liquidated, and so on and so forth. And then we can get these big whipping movements, right? Like this big 5% movement to the downside, and big players can just scoop this up. You can think of price in this situation as being like a ball in a swimming pool. You press it down far enough, hard enough, eventually it's gonna pop up, because all of the smart money in the market sees this as a fantastic buying opportunity. And that is why we always say the smart money, the big money, tends to buy at moments when the market is in fear. And you can see that on a micro scale in situations like this. Now, that being said, having pushed down to a price of around $64,700, prices quickly moved back up. We came right back above our key level, $66,500, came back down to retest, pushed on up to the upside, came back down, almost hit it again, got as low as $66,750, and now we have moved back up again from there. I like this long term because it means that we're now building value above that key former point of resistance, now turned support at $66,500. But there remains a lot of leverage in the market. Just take a look at the Bitcoin exchange liquidation map and you can see that there is so much more leveraged long positions in the market. And the same pattern is playing out once again, okay? Fear and greed, we're up at 65. That is greed, 65 out of 100. Leveraged long positions piling in. Don't get me wrong, there's some leveraged shorts in the market. There is about $1 billion worth of short liquidations waiting up at a price of just below $70,000, up at our next key level of resistance to the upside. Look how many leveraged long positions there are in the market right now. You're looking at about $3 billion worth of long positions that would be liquidated if prices were to move down to around about $64,300. Something to be mindful for as people start getting more bullish, start getting more euphoric. We're bound to see more leverage enter the market, and that means we're bound to see more volatility, and that is manifested in moves like this massive 5% wick, essentially straight up, straight down, and then back up again. This is being reported by other sources too, don't just take it from me. You can see here a analyst from CEX.io. That is one of the oldest centralized crypto exchanges, by the way. Bitcoin price faces correction risk as open interest surges amid low trading volume. The market is becoming fragile, and any loss of momentum could trigger a swift correction. Analysts are warning of a potential Bitcoin price correction as open interest in futures market climbs to new highs for 2024, while trading volumes remain subdued. Experts have suggested that the imbalance between rising leverage and declining activity could create conditions for sudden price reversals if traders begin closing long positions. That is exactly what we are talking about. But that being said, I do think that we are set for more bullish price action over the next few days, over the next few weeks, and hopefully over the next few months as well. You can see there is still a spot bid apparent in the market, okay? Some of this is perpetuated by the ETFs. Yesterday was another massive inflow day at $371 million. The 14th closed out at $555 million net inflows into the spot Bitcoin ETFs. Yesterday on the 15th being led by BlackRock with a $288.8 million net inflow. Absolutely massive numbers from the ETFs. Big money accumulating Bitcoin via the ETF products. On top of that, we remain a couple of hours away from a full moon. As we know, tends to be a bullish signal for markets. We don't know why, but the pattern is very much there. Go back through the charts, have a look at it yourself. And we are also just 20 days away from the US presidential election result. There is now a 59.9% chance of a Trump win. And as I've said before, I think the market has pretty much decided at this point that a Trump win is going to be bullish for crypto, regardless of what that might actually mean for the industry in reality. So in conclusion, Bitcoin at $68,000, we are technically in an uptrend, and we have technically been in an uptrend for a while now, and it is so great to say that again. It's so good to be back at these prices. Still a bullish combination of fundamentals, apparently a spot bid in the market, but as always, watch out for the leverage, watch your own leverage. Don't be another retail sheep jumping in with money that you don't have towards the top of the market. Be smart about it. Watch your downside and don't get liquidated. As ever, that is not financial advice. That is just my opinion. Thank you so much for listening. Plenty more to come. Catch you in the next one. Bye.